Hey, what's going on everyone? It's Griffin here and I hope you're all having a great day as always. Now, in my last video, I spoke about how I took a short 1 week break off from making stock market related videos, specifically stock updates. And I took this time off as an opportunity to audit my whole portfolio and really see for each one of my positions whether or not I wanted to buy more, hold, or even trim off some of these positions based on more up-to-date research and business developments. I also mentioned that considering current market environment, this was a great opportunity to invest more into your highest conviction stocks rather than maybe taking on some more speculative plays cluttering up your portfolio. So that's exactly what today's video is about, speaking about some of my highest conviction stocks as of right now. In fact, this is an exercise that is critical for all long-term investors because it allows you to revisit each one of your holdings and rebalance each position based on the desired weight, considering your asset allocation mix, which is always important to maintain. So yeah, today's video is going to be covering 4 stocks that I've been doing some further research into, either because I hold them in my portfolio or I am potentially looking to open up a position. And honestly, I've been doing research on dozens of stocks over the past couple of weeks, and considering current market environments, there aren't that many stocks that I personally see as being opportune at their current price points and valuations based on all the other information that I was doing research on. So do keep in mind that these are stocks that I would at the very least put on your watch list for the month of April. And I'll also be doing a part 2 to this video around mid-April, so make sure to subscribe to the channel so that you're up to date on these upcoming videos. As a side note, historically speaking, April is typically a good month to buy stocks for further growth throughout the rest of the year. So if you're looking to open up a new position or add to some existing positions that you have very high conviction in, then make sure to take this month as an opportunity. So with that said, let's get right into the first one for today's video. Alright, so the first stock that I've been really eyeing lately and wanting to bolster my position in at current price points is Amazon, ticker symbol AMZN on the NASDAQ. And this is a company that pretty much everyone is familiar with, at least as a customer. And if you're a stock investor, then most likely you either hold Amazon already in your portfolio or have considered buying into this company at one point or another. And by the way, if you hold, let's say, a NASDAQ 100 or even an S&P 500 ETF, you do have some exposure to Amazon. This is one of the largest companies in the world at a market capitalization exceeding 1.5 trillion US dollars. And as of filming this video, their stock is trading for right around $3,130 per share, which is up this morning following the broader tech market movement, but happens to still be down roughly 10% from the 52-week high of $3,552 per share, which was achieved in September of 2020. So quite interestingly though, the world's largest e-commerce player has been trending relatively sideways for the past 8 months, even considering the pandemic's push towards further e-commerce adoption, along with all of the other innovative branches of Amazon's business model. I've spoken quite a bit recently about my bullish views towards a handful of key industries that I see growing exponentially over the next 5 to 10 years, and e-commerce is one of my main focuses, alongside the cannabis market in the United States, as well as renewable energy worldwide. So at current price points though, Amazon's trailing price to earnings ratio is around 74.8, which definitely makes this an expensive stock, but based on forward guidance, their PE is just under 50, and regardless, this is a company that is set to continue growing at an unbelievable pace over the coming decade. What we need to remind ourselves here as investors is that while Amazon is most well known for their retail or e-commerce distribution platform, that is, well, they are also expanding into multiple different firms as well as industries that are set to grow by leaps and bounds over the coming years, making this somewhat even of an internally diversified position. Just to name a few, some of their main subsidiaries include Twitch, which is one of the main streaming platforms for gaming, Audible, which we all know for ebooks, as well as Amazon Web Services, Whole Foods, Twilio, and Zappos. And in this book that I've recently been reading called The Future future is faster than you think, Amazon is brought up constantly for the disruption that they're bringing to multiple different industries that are going to have profound impacts on our lives over the coming 5 to 10 years. I mean, honestly, I didn't even realize how diverse Amazon was and how disruptive they're looking to be for all of these key industries. So if there's one thing that I kind of got out of the book, even though it's not about this, it's that you should be buying Amazon stock and holding for a 5 to 10 year hold minimum. So yeah, we can see here that Amazon's top line growth is truly unbelievable. Over $100 billion in 2020 sales, above 2019 sales, with very little that can stop this company's momentum. Their net income has also been increasing quite steadily over the past couple of years and is expected to continue growing at a very nice pace through to 2025. I mean, just look at this expected future growth chart here. By 2025, Amazon is expected to make $730 billion in that year and have earnings of $65 billion. The company's balance sheet is also fantastic, with rapidly growing assets relative to debts, while their cash and equivalents are on an ever-increasing uptrend. Realistically, if you're looking for a rock solid mid to long-term hold, you really can't go wrong with Amazon. The amount of disruption that they're bringing to multiple different industries and their current and forward dominance on the retail or e-commerce retail, I should say, is just unparalleled. So yeah, I would definitely think that Amazon is a stock that either you should be opening up a position in and or looking to do so in the mid to near future. Finally, 31 analysts have an average price target of $4,106 per share, which would mean an upside of 32% on this stock over the coming years, with a bull case of 5,200, and even the lowest price target we're looking at for Amazon is 3,700, which would still represent roughly a 20% upside, which is really nice. All right, moving on to the second stock that I honestly just could not leave out of this video, even though I have spoken about this company quite a bit over the past couple of months on the channel. And so for this reason, some of you might be a little bit sick of hearing it, but I'm just so bullish on this company and the industry that it operates in. And considering the fact that they recently just released their Q4 earnings figures, which were fantastic, I had to highlight these in today's video. The company is Trulieve Cannabis, ticker symbol TRUL in Canada and TCNNF over the counter in the United States. Now, since I've spoken about this company a lot lately, I might sound like a broken record at this point, so I'll keep it pretty brief and quickly go over their Q4 earnings. So Trulieve is obviously a cannabis company, and its current dominance is in the Florida market, where it owns the largest majority of the market share in that state. And since we've recently spoken about Trulieve, let me just fill you in on the Q4 figures, since this is new information to the channel. As expected, revenues are up substantially for continued growth in cannabis sales, and total sales were $521.533 million in 2020, representing growth of 268.7% over 2019 figures. This was totally to be expected considering their dominance over the Florida cannabis market and expansion into new states. Honestly, Trulieve continues to impress me with their growth and is expected to continue on this growth trend. We can see from this chart that by 2025, the company's top line is expected to hit roughly $1.3 billion, and their bottom line should hit over $330 million, making this by far the most profitable cannabis company at the moment. Moving on, their income from operations was $218 million, up 105% over 2019, and their basic earnings per share were 55 cents, up 7 cents over 2019. Regarding their balance sheet, total assets are now $816 million, up $385 million since last year, with a current ratio now sitting at 3.53. So yeah, Trull maintains strong liquidity and a solid balance sheet as a backbone for their growth. And one last thing about the cannabis market, we're seeing more and more states legalizing adult recreational use cannabis. Just this past Wednesday, Governor Andrew Cuomo of New York has signed a bill to legalize recreational use marijuana, and being the fourth largest state by population, this provides massive opportunity for a company like Trulieve. I mean, honestly, we're just seeing fantastic business and financial growth for Trulieve Trulieve, and there's really not that many negative elements that I can bring up or even highlight for this company's growth over the coming 5 years that I can see from my research. As of right now, I am a shareholder of Trulieve though, and I hold around 115 shares of the company, which fluctuates between 5 and 6% of the portfolio's weight. But honestly, I'm so bullish on this company that I would even bring that position up to maybe even 10% of the portfolio. I really just see tremendous upside for the continued growth of this company, and as a result, their stock as well. Even analysts are projecting very nice price targets for Trulieve over the coming year, as demonstrated from this chart. And by the way, since I'm very bullish on the continued growth of the cannabis industry as a whole, I've pretty much analyzed every single one of these companies. And from my research, other than Afria, which I'm still a shareholder of since around $3 per share as of last year, and I've only sold off a certain portion of that position, well, Trulieve is really the only cannabis company that I'm currently investing in and dollar cost averaging on the dips. Moving on to the next stock, this is a company that is new to the channel, but that upon further research, I am considering opening up a first position in at current price points. So no, I am not yet a shareholder of this company. When and if I do end up opening up a position though, I will be letting my Patreon community know first, so definitely make sure to check out the link down below to access our Discord group as well as all the Patreon exclusive posts that I post on there. But the company I'm speaking about is Baidu, ticker symbol BIDU on the NASDAQ. If this is the first time that you hear about this company, well, it is an internet search provider in China. Essentially think of it as the Google of China, but considering the fact that Google is banned in that country, well, this is their largest player in the search space. And while Baidu does primarily offer a search platform, there are many other online websites and services that are banned in China that we're used to using in North America. So Baidu is the main provider of alternatives for their country, including a wiki website, social media platform, healthcare wikis, and more. So with that said, why would I be bringing up this company though, instead of speaking about Google then? Well, truth be told, Google is pretty much always a great company to buy and hold in your portfolio. It's just an absolute monster of a company, but Baidu has seen some very bearish movements over the past 2 months, with shares plummeting over 33% from its 52-week high of $354 per share. And as we can see from this chart, it would appear that the market is showing some resistance for this stock at around the $200 per share level going back to January of this year. So yes, it did bounce off of this resistance line last week, and now I expect that we'll see a reversal for this company's stock over the coming months. And why this is also a great time to buy Baidu right now, well, one of the main reasons why the stock continued to crash down past the $230 level was because Baidu was part of 8 stocks that were massively liquidated by the hedge fund Archegos Capital that got a margin call a couple of weeks back. So this had a direct impact on Baidu's share price as this hedge fund liquidated a massive amount of stock. So essentially what I'm saying here is that this share price having plummeted further over the past couple of weeks was very much tied to this incident, and now makes Baidu stock really attractive from a valuation standpoint. As we can see from this chart, the company also has expected revenue growth of 13% annually through to 2023, which should help the stock recover over the coming years and provide some very nice upside for investors. Speaking of stock upside, 18 analysts have an average price target of $349 per share over the year, showing upside of 70%. And based on the stock's current price in parallel to their earnings and other financials, I think this is very achievable. Finally, Baidu also has a great balance sheet with over 162 billion Chinese yen, which is enough to cover the entirety of the company's debt. So again, I haven't yet opened up a position in Baidu. I'm somewhat hoping that it'll drop back down to around the $210 per share range, at which point, if it does, I will absolutely be opening up a position. And on the flip side, if we do end up seeing continued bullish price movements for tech in general, as well as Baidu, I wouldn't mind opening up a position under the $230 per share range for the coming year minimum. And finally, the fourth and last stock for today's video that I think at the very least you should be adding to your watch list for the month of April is Teladoc, ticker symbol TDOC on the NYSE. And again, this is a company that isn't necessarily new to the channel, but that upon further analysis, and especially considering the current price point that this stock is trading at, I really wanted to bring it up once again for the month of April, as my convictions towards telehealth have not changed one bit. And TDOC being one of the main players in the American space with a share price that is down roughly 40%, I believe this stock should be on your radar, as this is an opportune time to potentially buy in for the first time for a multi-year hold. Now, in terms of share price movements, there seems to be a support line around the $170 mark going back to last November. But look, it isn't out of the question that values could continue to drop back down to the 140, 150 range. I'll be honest here, I did make the mistake of getting back into TDOC at an opportune time. It was somewhat premature after I got out of TDOC at around the $280 per share range that was triggered by a stop limit order that I set for this stock. I got back in at an average share price of around $213, which obviously in retrospect now was significantly too early. However, considering how the price has been trending over the past couple of weeks, now well below $200 per share, I have no problem whatsoever buying more and dollar cost averaging to lower my cost basis for a multi-year hold. With that said, if you're looking to either day trade or shorter term swing trade on a position like TDOC or pretty much any other position for that matter that I speak about on my channel, then this is definitely not going to be right for you, as we're looking here for investments that are going to grow over the coming 5-ish years minimum. I've been seeing a lot of posts lately on forums and other videos that telehealth is dead, and honestly I just think that is foolish if you look at a more macro point of view here. So telehealth is an industry that is 100% going to thrive over the coming 5 to 10 years. Medicine is one of the industries that's going to be disrupted the most in this time frame, and a company like TDOC is definitely one of the best players to be invested in if you want to ride this wave. Now, could we see more volatility in the industry and this company in particular? Absolutely. And so this is the company that I would not recommend owning if you're not willing to hold on through volatility. But for me, and based on my convictions, I think TDOC is just a great company to hold. If you don't have any telehealth stocks at all and you're looking to first open up a position, TDOC should be it, as it's one of the largest players in the United States, which has the largest healthcare market in the world and is poised for the most disruption and growth. TDOC's financials have also been growing like a weed, despite lots of investors being worried about the stock being a COVID play. That's just not what we're seeing based on top line growth and projected growth through to 2025. It is expected to reach $5.5 billion at annual growth of 25%. All this to say that at current price points, if you haven't yet opened up a position in telehealth or TDOC, I think this is an opportune price point. However, do not be surprised if we continue seeing higher volatility than the wider market for a company like TDOC. And once again, if we see the stock continue to tumble down around the 150 range, I will be loading up on this company. And that wraps it up for part 1 of stocks to watch in April 2021. I really hope you enjoyed today's video and that it provided you some up-to-date value on these companies. If it did, you know what to do. Smash the like button. It really helps the channel out. And also consider checking out the links down below to resources I use and recommend for new and intermediate investors. And if you want to get in on daily conversations about various different investing topics, then make sure to check out the link below to my Patreon community, where I post Patreon exclusive posts around 3 times per week, and then we also have access to a Discord community of really engaged investors. On that note, thanks a lot for watching today's video, and I will see you in the next one.